Thank you very much, sir, for being with us today. It's a pleasure having you. Let's start from that the inflation rate retreated in April in Turkey to 43%. The opposition in Turkey are saying maybe the inflation retreated and considers that Erdogan is using inflation, decreasing the numbers in order to get more political support in the elections. Do you have the same doubts about the inflation numbers in Turkey?
Hello. To start with, the high inflation in Turkey has always been a symbol and symptom of completely mismanaged monetary policy as far as the government is concerned. Now, just to say, the food inflation has been in double digits since the last 3 to 4 years in Turkey. We've seen a peak inflation of 80%, recently dropping down to the range of 40 to 45, 50%. Uh, Turkey under Erdogan, unfortunately, has always followed a very unorthodox monetary policy. Uh, Globally, when the inflation is high, just as is the case with Turkey, the global central banks are raising the interest rates. With Turkey, there has been a continuous downward slope in the drop in the interest rates. So this is something that is actually giving a spike in the inflation numbers because it is not following the traditional textbook approach of managing inflation. You are seeing the depreciation in the currency. Nevertheless, to answer your question, it will be very difficult for President Erdogan even to control the inflation if the interest rates are not raised.
I think that what you're saying, even if it's increasing interest rates, it will be difficult to control inflation. When I'm looking at the Turkish assets, this is with Kemal Oglu opposition as the savior of the economy, as the alliance of the opposition. We're saying that they will have a traditional monetary policy, and do you depend on the future of the economic or the economy of Turkey with the opposition, with what Kemal Oglu is saying?
The real interest rates in Turkey are amongst the highest in the world. Currently, it is something in the range of minus 65 to minus 75%. So, even if we take the word of the opposition, let's say they are elected to the power, it's going to be a very difficult task ahead for the opposition party to actually, manage the delicate balance between raising the interest rates, managing the further depreciation in the currency, as well as maintaining the domestic spending in the economy. So far, if you look at the GDP growth numbers for Turkey for the last year, the consumer spending has been pretty much resilient. This year, things might be tough considering that the earthquake has killed more than 50,000 people in Turkey itself. The economic cost has been something in the range of 120 to 140 billion for the Turkish earthquake reliefs and all. So, even in a scenario when the opposition gets elected to the power, their hands are going to be tied considering that the overall budget deficit is expected to exceed in the 5% range.
If your expectations for the deficit in Turkey to have or to be very difficult with opposition to deal with, it means that you expect in century financials the continuation of the lira retreat, because JP Morgan are saying that more retreat for the Turkish lira is expected even if Kemal Oglu maybe will take the power from Erdogan.
Right. The immediate outcome of the election, should the opposition party led by Kemal actually come to power, we might see some buying in Turkish lira. It might come down to in the range of 17 to 17.5. But then again, it's back to the economic fundamentals. It will all depend upon how the interest rate rise trajectory is going to be managed with the difficult balance of managing the public spending. The depreciation in lira, the long term trends for the depreciation should continue, and we eye the Turkish lira something somewhere in the range of 23 to 24 over the next 5 to 6 months period.
You mentioned that real interest rates in Turkey are the less. It's one of the minus because interest rates is very difficult to deal with the inflation. When I'm looking at city numbers, the trend from the alliance of the opposition to a traditional policy means that more than $50 billion from the foreign investments will come back and to get into Turkey again. Do you think that these numbers could be optimistic more than they should be, according to what you're speaking about the economic situation? And how far do you think that these money injections from the foreign investments will be a support for the Turkish economy during the next period?
Raising of interest rates, if the opposition gets elected to the power, is a big win for the institutional banks over there. We could definitely see some foreign investor flows as far as the debt market and the equity markets are concerned. Just to state the current statistics, the foreign investors currently continue to hold less than 30% of the Turkish stocks and even less than 1% of the Turkish denominated bonds. So we are looking at a ballpark number of something in the range of not more than 15 to 20 billion dollars over the immediate term when the opposition gets elected. But then again, an emerging market nation like Turkey, there is always a popular demand to cave into the more populistic policies wherein the population is more satisfied. So imagine a scenario where the interest rates actually starts going up, the inflation doesn't fall, then maybe the popular demand would be again to hold back on further interest rate rises. So it would be interesting to see how the things pan out from here.
How do you see the stock market in Turkey today? The stock market increased because the poll are showing that Kemal Oglu is preceding the justice and development and Recep Erdogan. We see that the Turkish bonds are increasing, and when you see the valuations for the stock market in Turkey today, they are trading with a PE ratio 3.7, while the MSCI for emerging markets at 12.4. So they are cheaper than MSCI. Do you think that the opposition success will support the stock market and we are going to see more inflows?
Definitely, should the opposition party come into power, or even so, let's say even if Erdogan somehow manages to stay into power and reverts back to the orthodox economic monetary policies, the uptick in the Turkish stocks could stay very well alive. This is based on good positive results from the banking sector. Stock like Turkish Airlines, that has been a retail investor favorite, it has shown a tremendous growth rate. So just we look at the quarter one earnings for the Turkish Airlines, there's been a 50% year on year growth in the overall revenues. The bottom line net revenues, the net income also came in handy. The banking sector is apparently doing well in the face of the crisis. So we do expect the uptick to be maintained should the policies actually be as per the market perception.
Today, the banking sector index increased by more than 9%, and the reason is that we have this optimism. If we look at the polls, today interest rates increase in Turkey, the stability of policy and monetary policy more orthodox. Do you think that the banking sector is going to be the winner, and how it will impact the deposits in the banking sector if there is more clarity in the politics and economy?
Turkish banks are well capitalized. The capital buffers are very well intact to face rapid depreciation in lira. So then again, I mean, some banks like X banks, S Bank, they have a buffer margin of 500 to 600 basis point to withstand a further 10 to 15% depreciation in lira. So the overall, the banking sector is still well capitalized, well buffered. The capital adequacy ratio is in the range of 18 to 19%, which is supporting the overall rally in the stocks. So barring a very big knee-jerk reaction in lira when it again depreciates by something like 40-50% in a span of, like, let's say 1 to 2 months, we don't see a major banking crisis in Turkey.
Thank you very much, Mr. Bhavik, for being
Thank
with
you.
us today.
Thank you.